Welcome back, everybody. It's another week of the 9 to 5 Sunday service with the 9 to 5ers, Mr. Smart Money, my co-host, Mr. Legendary, and we got Net Gains, my sis in the building, and Willie. We still ain't came up with one for you yet.
Brother Willie.
My name isn't Net Gains anymore.
Oh, my land. What we got this week?
You don't remember? It was
the 10K.
Yes,
10K.
the reporter.
The reporter.
Net 10K. The reporter.
All right, so Mr. Smart Money, Mr. Legendary, Net 10K, the reporter, Sis, and Willie. Welcome back. We're going to start it off again as usual. We're going to throw out the disclaimer.
Okay, I am Mr. Legendary. Welcome to the 9 to 5 Investors Sunday service. We are not financial advisors nor fiduciaries. The stock market comes with its own inherent risk, so please be advised to do your due diligence. Everything that we share on this segment is for educational and entertainment purposes only. So please keep that in mind when you are navigating the stock market.
All right. And y'all know how we kick it off. We're going to start it off with a weekly recap. Anything y'all seen happening this week in the market that y'all want to talk about?
Yes. Biden's infrastructure plan supposed to be unveiling this week. Let's see here. The president will travel to Pittsburgh to make an announcement on March 31st. Details to unveil a multi-trillion-dollar infrastructure plan next week. He is considering a range of options, scopes, and sizes of plans, and will discuss with his policy team in the days ahead. So it looked like we're finna get an influx of money to our infrastructure. So that goes. I
seen something else about that. The Biden infrastructure plan. I think it was more so centered around like taxes. You seen anything about the taxes, how taxes play out with his infrastructure plan? Let me see if I can pull it up real quick.
Yes, said the physical infrastructure portion of the Build Back Better program will be the first of two phases included in the overall spending package, according to the Times. It would also include clean energy upgrades, a stable electric vehicle charging stations, a stable of electric vehicle charging stations across the country, development of a 5G telecommunications network, rural broadband deployment, 1 million affordable and energy efficient housing units, and advanced training for millions of workers. The second portion will likely focus on what is referred to as human infrastructure and would include investments in education and childcare programs. These elements include tax credits to help families afford childcare, extending tax cuts to help fight poverty, free community college, and universal pre-kindergarten. So that's what's going to be included in the plan.
Okay.
So we're looking at the first. I'm looking at the first phase. It said clean energy upgrades. Remember, during the election, we was talking about if Biden is elected, he will push for clean energy.
Mm-hmm.
So we see him following up on that. It says a stable of electric vehicle charging stations across the country. So they gearing up for EV. They starting to lay the groundwork. So remember back when we did the post-election playbook, we said if Biden wins, clean energy, electric vehicles. So we seeing that. Yes, also, sir. Development of a 5G telecommunications network, rural broadband deployment, and 100 affordable and energy efficient housing units. So now we going to the 5G. the 5G plays that we discussed at the top of the year. So we're looking at clean energy, EV, 5G. They all expected to get bumps in funding. So do your due diligence when you're looking at companies in the clean energy, the electric vehicles, and the 5G. Those might be some company, those might be sectors, industries to take note of.
As far as the buy and plan go, with capital gains taxes, that's what it was I was talking about. You heard anything about an increase in capital gains or corporate taxes?
Yeah, he does plan to increase, give a slight bump and increase to capital gains tax and business tax.
You think that's gonna have a negative impact on the market, an increase on capital gains tax?
Not much. Maybe not much. Depends on the degree of increase. If I don't think it's much of an increase to be to scare investors out of the market.
Okay.
I think historically, when we look at the way the market performs, according to the administration that's in office, historically it performed better under Democrats. So I think that all the rhetoric about if Biden win, he gonna up the taxes, the corporate taxes for the rich, he's gonna send us to the poor. I think all that's overblown.
Okay. Anybody else seen anything in the market this week?
I didn't see anything in the market, but I seen Jermaine purchase an NFT.
Yes, I did. Purchased my first NFT.
Tell us a little bit about it, G.
I bought my first NBA Top Shot. It's a Zion Williamson dunk. I paid $40 for it. It's an individual moment. I haven't been able to get a whole pack yet. So I just bought an individual moment until I can start to put together the packs and start my collection. But it's basically like stocks. You know, every player is a stock. You know, you buy this particular, every moment is a stock. You buy this moment and see the price go up, the price fluctuate. You put it on the marketplace and open it up for bids, and you take bids on it. And depending on the demand can drive the price up.
So that's something to look into. And then me and Jermaine had a conversation about it yesterday about all the different possibilities of what NFT could go. I'm looking into possibly trying to purchase a music NFT or maybe one of the digital art pieces or some shit like that.
Right. I just saw it. They just had a digital art piece sold as an NFT for, I want to say, like $70K. The artwork was made by a humanoid robot. It was a painting drawn by a humanoid robot. It just sold for like, I think, $70K on the market as an NFT. Now we got androids selling artwork, creating artwork.
That's crazy.
Does anybody know what it takes to create an NFT? Like, whether it be music or art or whatever, like, does anybody know what the parameters are for getting it, I guess, authenticated to be an NFT?
That's what I'm starting to study now. I'm about to start studying that now.
I'm not aware of that, but I do know that it's an authentication process that it verifies that this NFT comes from the creator, the original creator of the content. So I know it's a process. I just don't know what it is. And that would be to deter people from putting your music or your artwork, taking your music, your artwork, and making their own NFT and selling it.
Yeah, so that's like if you make like a vegan cookbook or something of your recipes and you make an NFT, it'll verify that it's you. It's coming from you. So let's say if you do put your cookbook out there and people bid on it, you making profit off of it.
Right. Profit that you determine. You determine the amount of royalties you want for every time that is resold. You could say 20%, 50%, 80%. You determine that when you create the NFT. So if I buy Net's vegan cookbook as an NFT and I have it for a while, I try some recipes or whatever, somebody else want to buy it, I put it on the marketplace, somebody else want to buy it, they make a bid on it. So they bid on it. They bid is more than what I paid, substantially more than what I paid. I sell it. When I sell it, you get a royalty check.
Okay.
When that person sells it, you get a royalty check.
Got it.
So this could potentially be a game changer for people that make, with intellectual property, people that create music, artwork, poetry, whatever have you, music videos. We was talking last night, if you could do music videos and release them as NFT. I don't think that they regulated by FCC guidelines, so you can pretty much put whatever content you want in the video. Make 100 of them. Make it rare, make 100 of them, sell them as NFTs. There's only 100 of these exclusive videos out in circulation. What will be the price on them? Imagine if some of the greats, this was around when some of the greats like Prince was out, and he got that vault with all that unreleased music, and he had a structure where that music was released through NFTs. He would be getting paid in perpetuity. His estate will be getting paid in perpetuity. A rare Prince song unreleased, there's only 10,000 in circulation, NFTs of this song in circulation. How much would that be? That's a game changer. If I can do videos, if I can do a video in an NFT format, what's to stop me from doing a short film in NFT format? So if I'm a screenwriter and Hollywood don't want to back my material, my content, I release it as an NFT. If I'm a music artist and I'm an underground artist, I got a fan base, but I don't have a major record deal. I don't need one now. I release my stuff through NFTs. My core fan base is going to buy it and they're going to buy it and resell it. And I'm recouping royalties. Right now, the average artist per stream, he may get a percentage of 1 point. A very small percentage of 1 point per stream. With the NFT, every time he getting 20%, 20 points on royalties, 50 points on royalties. What I need a record label for?
Get it on my own now.
Yeah, I can get it on my own. I release all my stuff through NFTs.
I'll see how that
Like
changes.
I was saying, I mean, even if I'm not into clothing or anything like that, but I guess like I was saying the other week, even if you did it with clothes, like, because people can print up clothes, people can, like, just like how you get the image for Godfrey and you're able to embroider it, or you have the image for the 9-to-5 investors with the shield and you're able to embroider it, you could even turn that into an NFT. Like, I don't know, you know what I'm saying? You probably have to hand draw it out and make it look similar to whatever it is right now so that it could be, I guess, 100% authentic to,
Right.
yeah, whoever created it.
It's actually already a market for digital clothing. We see it every day. What these kids asking for? V-Bucks, Robux. What they doing with the V-Bucks? They buying cute little outfits for they character on their game.
Yeah.
But those outfits bought with real dollars. You know how to hit them credit card, how to hit your credit card.
That's crazy.
You know, they buying, it's like on 2K. I play 2K. I got a created player. Jordans come out in real life, they come out on the game too. So here I am. I'm putting $10 real US dollars onto my account to buy VC, to buy the new Jordans for my created player.
That's crazy.
Yep. So now with the NFTs, you can actually release those digital versions of those Jordans as an NFT and make people buy the NFTs.
Yeah,
So
then they
now
could,
when I'm on the game, I got an exclusive pair that nobody else got on. Where you got those shoes from? This I got them through an NFT. You want to buy them? I can meet people in the game. They can buy my shoes off my feet through the NFT. These kids can buy these outfits and stuff for their characters as NFTs and collect them and trade them.
that's wild.
It's a lot of possibilities with this NFT. They even, I was telling Darius last night, they even selling virtual real estate. They selling
crazy.
real estate. That's digital real estate through NFTs.
Confused.
Crazy, right?
It's almost like
digital real estate. Hi, everybody.
Hey, how you doing?
How you doing, Quinn?
Good, good. What's digital real estate?
Okay, digital real estate is like you ever played the game Sims
Yeah.
or Grand Theft Auto, right?
Yeah.
Okay. Now it's a movie called Ready Player One. It was based on a book. But in the book, it was set in like the future, the near future, where our society had devolved into a virtual society. People were living their lives through VR. They would be living in reality, they would be living in a shack. But when they put these goggles on, you can be whoever you want to be. You can own 10 mansions, just like on Grand Theft. You own 3 houses, 2 condos, I own a nightclub. This is digital real estate. You know what I mean? And I can sell a nightclub to somebody. I can sell my nightclub to somebody else. I can sell one of my homes to somebody else.
Okay.
And the way VR is going, I can see us eventually, you know what I'm saying, getting like that in real life, people living through the virtual world as an escape to their real life. Or
People do it now.
Yeah, that sounds like that game where them kids buy those skins or whatever. I can't think of the name of that game.
Right. Fortnite. See, kids they already doing it. They buying digital clothes. So next is digital cars. Grand Theft Auto, you may have a garage with 20 cars.
Yeah.
Hey, Sean.
You don't even have a license. You know, you're a 12-year-old, but in your virtual world, you grown.
Wow, this is blowing my mind a little bit. I'm gonna have to take a minute to digest that.
Yep.
Yeah, that's how that
That's
shit works.
crazy.
The wave is coming, whether we ready or not.
Gotta
Well,
get it.
not
Gotta
only-
get into the stuff, man.
Okay, not only that, I get okay. So stocks are already digital, but you think it'll get to the point where people can buy portions of these things as well, just like you buy a portion of a stock. You know what I'm saying? You only buying a share of a stock. Not everybody. I mean, some of the, like for Top Shop, for instance, when you go on the website, I mean, they have some that are extremely cost hundreds of thousands of dollars. People can't really afford that. You think it's going to get to the point where you can buy a piece of the NFT?
Well, what happens, the ones that you see that cost that much money, 9 times out of 10, they got them in a pack. Almost like trading cards. Back in the day, we used to have a digital trading card. I may buy a
Got
pack and it got LeBron rookie card in it.
Got it.
I didn't pay a lot for it, but just by holding on to it, or I get a rookie, and then let's say 5 years from now, I still got the card. This rookie done won 3 MVPs. He got a titles. His stock goes up.
Okay.
Now that card worth more money. You know, that's how we used to do trading cards back in the day.
Yep.
But now it's just digital.
So similar to memorabilia, I guess.
Right.
Digital
Memorabilia.
memorabilia.
Digital memorabilia.
Okay.
And actually, NFTs has now been classified as a brand new asset class. So now you got stocks, you got bonds. Like we had 17 different asset classes. Now it's that's the 18th asset class, just like real estate, things that you can invest your money in.
Oh my goodness.
Yep.
This is wild. Okay.
Yeah, I think it's kind of cool, kind of scary, but kind of cool.
Mm-hmm.
So
Gee,
I done made my first foray into it. I bought my first Top Shot.
Well, congratulations.
Yeah, now I got to see how. I don't know what to do with it now. Because I just saw some
value, how that shit increase value.
Yeah, I just joined a Top Shot Facebook group. They got a Facebook group. So I just joined it to kind of like get a little more info. And I saw a guy, he had some no-name ass players. And they was here. I saw some of his selling for like $300. And I'm like, I don't even know this guy. The highlight, I'm like, I don't even know this player. It was selling for like $300. I got Zion. So what's that worth?
It gotta be worth something.
So, like, do you have to put it on like any type of memory chip, or it's like downloaded to your cloud? How are you keeping it? Like, because let's say it takes 5 to 7 years for his career, whatever the case may be, like you said, for it to raise in value. What if you don't have the same computer? How are you keep up with it? How is it stored?
Well, when you gotta, when you go on Top Shot, they ask you to create an account.
Okay.
So when you create an account, the account is linked to another website called Dapper. So once you create your account, every Top Shot moment that you buy is saved in your collection, which is through Dapper. So let's say I accumulate 10 moments. I can always go in my collections and they'll be right there. All my moments. Also, other people could view my profile and look at my collection. They can go check out my collection and see what cards I have. They could see the value of my collection. His collection value, he got a $10,000 collection. Let me go check out what he got in there. People go look at my collection. Oh, he got LeBron James. Oh, he got one. I got this one. I may have a card that they need to complete a set. Because it's sets that you got to collect to complete. I'm buying the whole rookie set. I need the whole rookie set. I need one more card. I need one more moment. This guy got the moment I need to complete the set. So now what is that worth to me? I may be willing to pay him double what he paid for it just to take it off his hands so I can complete my set. You feel me? He got a card that I need. What is it worth to me? That's how the price can fluctuate. I can buy that Zai, I can buy one for 40 and turn around and sell it to somebody for $100 who really need it.
Very interesting.
Yep, and then I catch a pack drop when they drop the packs, because they drop the packs different times, but they be hard to get because they sell out so fast. But I catch a pack drop, I buy a pack for $10. Inside the pack gonna give me 3 to 5 moments, and they're gonna be random. So I can buy a pack for $10, $20, and inside that pack, I can get one moment inside that pack that's worth $300. It's just like digital trading cards. Now that's just the NBA's version of NFTs. But it's all type of different versions of NFTs. If you into like comic books, superheroes and stuff, Star Wars memorabilia, they have Star Wars NFTs. It might just be a damn picture. A picture of Darth Vader or some shit. And it's an NFT. It's exclusive. And that picture may sell for $13,000. That one little digital image. If you into like Pokemon, they got Pokemon NFTs. You got a little digital image of the little fucking Pokemon, and this thing go for $27,000. Like, it's crazy.
All right. Other news. What's up?
Other news. Have y'all heard about the ship blocking the Suez Canal? The ship that's a mile long.
I heard about it. I know we talked about it yesterday.
That's crazy, man. It's blocking the Suez Canal. That's where we get all our imports through. So long as that ship blocking, we can't get no more imports. So that's affecting trade. Keep an eye on that going in the next week. We may run across some shortages, temporary shortages in some goods, until they move that boat.
So I should have did a little more research to find out what companies would be affected by it, but I did run across that news.
Yeah, pretty much everything we get from from the Eastern Hemisphere, it's coming over on shipment containers. It's coming through the Suez Canal. But if it's blocked, we can't get our goods from over on the Eastern Hemisphere.
Did they say why they blocked it?
It's a ship. It's like stuck.
Oh, it's stuck.
Yeah, the
so
canal is narrow.
It's not on purpose.
Nah, not on purpose. The canal is narrow and the ship a mile long. The ship kind of like turned. It's like stuck in between nothing can get through. Big ass ship.
Okay.
I caught some news with Microsoft this week. Microsoft and the Discord. Microsoft and talks about Discord. And also seeing about Microsoft, they launched a decentralized like an identification platform that's going to be linked with Bitcoin blockchain. It's called Ion. Basically, it's just going to be, like I said, a decentralized identifier. It's going to be used for like online purchases, making online purchases a lot quicker, a lot safer. They went with Bitcoin. They felt like it was the necessary choice for success. They say they looked at Bitcoin for this move because they realized Bitcoin was the only blockchain that would probably be too costly to attack. So when you use this ION decentralized identifier, logging into a variety of online platforms, including social media or even buying tickets online, could be made simpler by the verification provided by the DED, versus the decentralized identification. So all your emails and stuff, instead of everybody else having control of it, is actually independently owned by you as a user, and you got it decrypted, whatever, through the Bitcoin blockchain. They're using the same process. So that also go to show further validation for Bitcoin and cryptocurrency moving forward. And as far as the chip shortage go, that's going to affect NEO. I seen the story about how it's dragging NEO down. That's one of the factors that's causing NEO to have a downtrend right now. TSM, Taiwan Semiconductor, they also involved in chip production. They're actually one of the biggest producers of chips. I think the largest producers of chips. So for them, they got to try and pick up the demand to keep up with everybody. But that's what I caught over the news, the news for the market this week. Anybody else caught anything they want to add on to that?
I ain't catch no news, but I just been.
You say you ain't catch no news. What you say, God?
I say, I seen that Fidelity said something about starting their own like Bitcoin ETF.
Oh yeah, what was the name of that?
I don't even know if they have a name yet. I gotta go back and read. Maybe I missed it. But they have to have a name because they say they already tried to file with the SEC. I don't know. I'll look it up. I'm gonna put it in the Discord. Well, look, I had just caught that headline. I had read it halfway through the article.
So Bitcoin ETF could possibly be on the way. All right. Moving forward, we got the Adventures of God for this week. Set up the screen share. Jermaine. So yeah, we're gonna do the Adventures of God for this week. Then after that, we're gonna do a little intro to technical analysis as far as the charts, understanding candlestick patterns, how to read candlesticks, exactly what a candlestick is and why we use them, as far as to plot support and resistance, to determine trends in the market, and we're looking for market direction. So all of this is information that we can get using the candlesticks. So we're gonna go over a couple different charts to show y'all some patterns and break down the candles. And then that'll be it for this week. Until next week. But while we're waiting on Jermaine, let me pull up something real quick. Now, Estimize, that's for the earnings reports. If you want to look at the earnings reports to see when they usually beat earnings and everything like that. But for the seasonality, if you want to check when your stock's doing good or bad, you want to go to stockcharts.com, and they got a section on the chart where you click for the seasonality of the stock, and you type it in, and it'll give you a bar chart of months where your stock closed higher than it opened, which means it was a green month for that stock. Then you can go back through the historical data, however long they got for the information, and do your own research or whatever, tally it up however you want to do it, and figure out which months the best months for your stock and which months the months that you can kind of expect it to be on the low end or slow down a little bit. So That's stockcharts.com. And another website for y'all to use for your options as far as calculating profitability is optionstrat.com. You go in there, type in your company that you're looking to trade your option on. You choose your side, call or put. You go in there, select your expiration, you select your strike, and it'll give you a line graph. Well, it's a curve graph. It'll show you where your profit will be at by different time periods in that contract. So you can kind of plot out what you'll be looking at around different times at different prices. You could put in where you may potentially want to exit and move on to a new position. But those two websites you might want to start using for your research.
Are you gonna put this in the Discord, the website names?
Yeah, I'll put them in the Discord.
All right.
All right. Now we're finna get going with Godfrey though.
Okay. This week's episode of Godfrey, we got episode 8. Okay. So last week we talked about, hold on, go back. So last week, do y'all remember what we talked about? What was last week's episode?
Diversification.
I think that was the week before last.
Last week we did the continuation of the fundamentals.
Yep, and we
was talking about his stimmy, right? How much money of the stimmy we was gonna spend on Apple. We decided to get what, 3 stocks of Apple?
And we decided to put $1,000 in the bond pot.
Yep.
Yep. But before that, we talked about the different type of investors.
Oh, versus trader.
Investors, traders, different types of traders, and what type of investor / trader are you? So this week's episode, we talking about the different stock categories. What type of stocks that are best suited for you? So there are seven different stock categories. You got cyclical stocks, you got blue chip stocks, speculative, growth, value stocks, income, and penny stocks. Okay, the first one we're gonna start with is the blue chip stocks. Blue chip stocks are large, stable companies. These are companies that are continually profitable. They usually experience slow growth, but steady. They offer dependable earnings, and they are typically more expensive than your other stocks, but they're lower risk because they provide established track records for earnings. So when we talk about blue chip stocks, we're thinking about stocks like Apple, Microsoft, Amazon. These are the blue chip. These are what you would consider blue chip stocks. Large companies. They are continually profitable. It says slow growth, but some of them tend to grow pretty rapidly. But usually they grow. They're pretty slow growing, slow and steady. These companies, like I say, dependable earnings. Expensive. We know how much Amazon costs, the Chipotles, and you know what I mean. Some of these blue chip stocks are expensive, but they're lower risk. So you're paying for the lower risk. These are established companies. Blue chip stocks are established companies. You know, the companies that you know, the household names. The next one we have is the speculative stocks. Speculative stocks are startups with little financial history. So we was talking about Nikola earlier. Nikola had little financial history. We pretty much was basing our optimism off the ideal that they provided. They didn't even have a car or a product. Nikola was a strictly speculative stock. They developed new products or explore untapped markets. High amount of risk involved with speculative stocks, but there's a potential for huge returns. So we think of speculative stocks, it's a higher risk, higher reward ratio. You know, if you pick the right one, it could go to the moon. You could be looking at the next Uber, the next DoorDash, the next Airbnb. You know, these are companies that develop new products or new ways that we use products and explore previously untapped markets. You know, Uber revolutionized the way that we travel. If you look at Carvana, a company like Carvana is revolutionizing the way that we buy cars. You know, some of these, Carvana may be considered a speculative stock, but it has great potential. So the next one we'll be looking at is growth stocks. Growth stocks are companies expected to have high earnings. Their earnings are usually reinvested to fund development of the company. To ensure that the company has faster growth, they would typically reinvest the earnings instead of paying them out in the form of dividends. Growth stocks, like I just said, have low dividends, if any, because they typically use that money to, like I just say, reinvest in the company and make it grow at an exponential rate.
Somebody in the chat name a growth stock or what you would consider a growth stock.
Right.
Come on, y'all. Throw out a name. What you consider a growth stock, looking at the definition.
Oh,
Does Neo pay out any dividends?
They don't necessarily have to. Low dividends, if any. I would consider Neo a growth stock.
Yeah, I would consider Neo a growth.
Your Neo, your Blinks, possibly Tattooed Chefs, all these up and coming companies who not yet big names, but they actually have some good movement and momentum behind them. These would be companies you consider to be growth stocks.
DraftKings, Beyond Meat.
Yeah.
And growth stocks. The next one we have is the value stocks. Value stocks are viewed as undervalued in the market. Value stocks generally have assets worth more than the stock price. Investors view company shares as a bargain. So we look at value stocks. Value stocks are seen as undervalued at the time. When we look, it may be a great bargain. I know this is a great business, but the stock price right now at this current level is below market value. This is what long-term investors look for. This is what Warren Buffett look for. He's a value investor. He's always looking for values on the market. Right now, the banks, a lot of the banks have value. We know they're great businesses, but right now they may be a little undervalued. Airlines.
Mm-hmm.
The airline company, there's some airline companies out there that may be great value companies, make great values right now. So we want to always keep in mind, values are a long-term investor's dream. It's what you want. And always keep in mind that price is what you pay for a stock and value is what you get back in return. So it's a difference. Just because you see a stock that's cheap doesn't mean that it doesn't have value, and vice versa. So moving on to the next company, the next type of stock is the income stock. This is a good one. Income stocks are generally stable industries. The energy industry, finance, finance, industrials is a good industry to find good income stocks. They're often blue chip stocks. Normally they pay high dividends. The income stocks or dividend stocks, they pay high dividends. They consistently grow and earn income streams. Stable. They pay out dividends, usually high dividends, usually increasing dividends over time.
So your income aristocrat, your dividend aristocrats, dividend achievers, these would be income stocks. Your real estate stocks, those also pay high dividends.
Right, REITs. We talk about REITs, real estate investment trusts, those real estate stocks. These are great income stocks. They pay big dividends. Your AT&Ts, your Coca-Colas. These companies pay great dividends. These would be considered income stocks. These would be stocks that once you accumulate enough of them through the dividend payments, through the stock value appreciation, you'll be getting steady payments that you can use as income. If you get paid a dividend, if you get paid dividend payments, whether they monthly, quarterly, that can be counted as income. You can use that as income, or you can reinvest those dividends into the company and buy more shares and have that company buying you more shares through a process what we call compounding.
So if you wanted to set up an income portfolio, I'd probably set up something like an Apple, throw in Nike, throw in O for your real estate. And now you got your a little bit of diversification, and you got your 3 stable companies that's gonna pay you income over time. You just continually build that up. Now you got your monthly or quarterly payment coming to you every month or every quarter.
Yeah, you could be picking up an extra $200-300 in dividends every month just by holding these income stocks. Then you got the penny stocks. Penny stocks are low price but high risk. Penny stocks trade at no more than $5 a share. Penny stocks are issued by small startups that need to make money. This is how they get an influx of capital to grow their businesses. These small businesses that's just starting. Most stocks in this category fail to thrive. So it's like finding a needle in a haystack, a diamond in the rough. You know, there will be companies that start out as penny stocks and will go on to grow. They'll maybe grow and upgrade into growth stocks. Maybe they'll upgrade into speculative stocks. Maybe they eventually upgrade into blue chip stocks. Who knows? You know, but you can find great companies in the penny stocks. It just takes a little more dedication because it's a little harder. Penny stocks, they usually don't pay out dividends, and these are companies that are less than $5 on the market. Share price of $5 or less. These would be considered your pennies.
2 examples of penny stocks that turned into growth stock: AMD and NEO. NEO was under $5, I want to say close to 2 or 3 years ago. And we already see where they went to and where they're sitting at now. Same thing for AMD.
Started out as pennies.
So like he said, it can be done, but it's not like every day that you find a penny stock that's gonna turn out to be something. So it's a lot more risk involved when you playing with penny stock.
Right. I wouldn't advise holding penny stocks long term. People usually trade penny stocks. They trade them. That's where they find the value at in penny stocks. Next, we have cyclical stocks. These are stocks that's dependent on the health of the overall economy. When the economy is strong, these stocks tend to flourish. But when the economy experiences tough times, these stocks lose substantial value. Typically, these type of stocks can be found in the airline industry. We know how the airlines are fickle. When the economy is bad, one of the first sectors that bear the brunt of that is usually the airline sector or the airline industry. Electronics, car manufacturers. When the market is choppy, these are the ones that experience the brunt. If we look at right now, if we look at the correction that we in right now, that's been going on for the past about a month or so. If we look, NEO been taking a beating. XPEV, all these car manufacturers, specifically the electronic vehicle manufacturers, they've been losing value. We look at the airline industry, it's starting to tick up now, but that's more based on the vaccine. But every time when the market goes down, when we look back at the 2009, 07, when the market was down, who had to be bailed out? The airlines, the car manufacturers. You look at the .com bubble. When the economy went down in 99, a lot of the electronics, a lot of the tech, it suffered. Now, why is it good to know about the different type of stocks? Well, it can help you understand the movement. It can help you understand the movement if you know that this is a cyclical stock. Then it may help you to better understand why it's underperforming right now. You know, if I know that this is a penny stock, I can predict the movement. I'm not going to stay in this for too long. This is a trade. I'll trade this stock instead of hold on to it for long. It'll help you better make these type of decisions. Diversity. It helps you become more of a diverse investor. That's a key word that we always talk about, diversification. You know, that diversification not only it applies to different sectors, it applies to different type of stocks. When you're talking about growth, you want a good mixture of growth, speculative, income. You want a good mixture of these stocks for diversification. Knowing the difference in the types of stocks can also help you better understand the overall market sentiment. You know, a key phrase that's been going on the past couple of weeks in the market that I've been hearing, sector rotation. Sector rotation, we've seen a lot of the money rotate. It's rotating from those growth stocks going back into the value stocks. So this is what they're talking about. The money's coming out of these growth companies. Like a lot what we see in a lot of these tech companies, we seeing starting to turn trend downward because these are growth stocks. The institutional money has rotated their money, pulled their money out of these growth stocks and put it back into the value stocks. When you look at the CVS, the Walgreens, the Macy's, these value stocks that the money's going back into now is being rotated. So knowing the different types of stocks, it'll help you better understand sector rotations. And that overall will help all of us become better investors, which is the goal at the end of the day. So that's sector rotations, the different sector rotations.
All right, y'all. Anybody got any questions? Another good presentation. Good shit, G.
Good presentation.
Yep, appreciate you. We know there's a lot of sectors, a lot of rotating going on right now. So that's why I always try to keep in mind which stocks is which. When they say investors rotating out of the growth to the value, now I know right where to look. I know where they at.
Mm-hmm. Now we in there too. We right along with you. We moving with
Right
the
along with
wave.
you. So we follow the money.
So moving forward from God this week, we're gonna hit a little bit of technical analysis with an intro into charts and candlestick patterns.
Oh yeah.
So let me pull up the screen for you.
Oh yeah. We finna get into some technicals. Started getting into some technicals now.
All right. So we on Thinkorswim. Right now we're gonna look at Viacom. We're just gonna start with just the basic anatomy or structure of a candle or a candlestick. So as y'all can see, we got green candles, we got red candles. Can y'all see the candle that I'm pointing on right now?
Yeah,
Yes, I can see it.
All right. So what I'm directly hovered over is what we call the body. The little lines at the top are what we call the wick. Now, all of this information from the top to bottom is going to tell you what price the stock opened at, what price the stock closed at, how high the stock went up, and how low the stock went down during a certain time frame. For instance, my chart right now is on the 1 year, 1 day time frame. So each candlestick represents 1 day. So on this day, the stock, since it's green, we read it from bottom to top because we know that the price went up. It's a bullish candle. On red, you read it from top to bottom. It's a bearish candle. I mean, the price went down. So right here, the price opened at $74.44. During this day, the price went as low to the wick. It stopped at $73.86. But it went as high as $84.58. Throughout all of that movement, it closed at $84 even. So you can see that the price had some up and down movement, but overall, it started here, ended here. It was a green day for that day. On the opposite side, we got a red candle. The price opened here following this green day. It came and opened here at $84.29. Then the price gets pushed down all the way to $77.34. Before it closed, it gets pushed back up and it ends at $79.08. So that's just a basic breakdown of what the candlestick is, what it represents, and what's going on with these candles. Y'all got to understand? Y'all got that?
Yeah.
Each candle tells a story.
So if I switch the time frame from the year and a day to 5 day, 3 minutes, it's a lot more candles now because the time frame is shorter. Now you see what's happening every 3 minutes. These candles are showing what happened every 3 minutes. If I zoom in a little bit more, we can see from this 3 minute window, it opened at 56.02, got pushed down to $53.70. That happened in 3 minutes. The next 3 minutes, it went from 53.76 all the way down to 52 minutes. So a 6 minute trade, if you was doing a real quick trade, you would have put your put in and caught it from 56 to 51. That's a 5-point move. That's some money to be made right there. And that's all in 6 minutes. So on different time frames, the candle's gonna represent different information. So you could use whatever time frame you're comfortable with using. We like to use the year and the day or the 5 day, 3 minute, but you can set it up however you want to. But that's just showing you what the candles represent. Any questions on that?
So the more red is a bearish trend, the more green is a bullish trend.
Correct.
Yeah, well, the direction gonna tell you the trend. If it's going down.
Okay, so let's draw a line real quick.
Yeah, so Viacom is on a bearish trend.
Right. Yeah, Viacom going this on a downward trend. Now it just came out of an upward trend about a week ago.
Yeah, it was at $97. Now it's at 48.
Mm-hmm. So candlesticks, the candlestick formations, the way that the bodies are shaped, they can also be signals. Use that signals to tell you when a trend is finna reverse. So always remember, each one of these candles tell a story.
I'm gonna connect these lines for you, and then you can tell yourself what trend you see. So what trend do y'all see with the white lines?
What direction is it going?
Downward.
Yeah, downward.
They're going to the toilet.
Yep.
Okay.
Downward trend.
This how you can also use your little candlesticks. And this right here, drawing this trend line right here, you can do this without using the moving average, the volume, none of that. You can use just straight candlesticks and connect your point. It go from here to a low right here. You draw your point. Go from here, come up a little bit, draw your point. It bounce back down here, draw your next point. You still see this is 3 points. 1, 2, 3. On the third point, it's going down. It extend over a little bit and raise. It come back down. Your trend is being continued. Now, if you go over here, it start to bounce up a little bit, right? So I could draw a line right here. It come down a little bit. Then I go over. It go up. It start to come up. Then it go into consolidation. But this is all just basic candlestick point plotting without doing any other extra technicals. It's just using your candlestick. Now, if you want to go a little deeper they have what they call candlestick patterns. One that I could point out right now that's easy. Damn, let me zoom out. Is what we call a bearish engulfing candle. You see this green candle, then you see this red candle. The red candle that follows the green candle completely engulfs the green candle right here. It ate up all of that, and it actually went down further. In some patterns, this would be considered a bearish signal, telling you that the price is finna get ready to go down because the sellers are stepping in heavy. On the opposite side of that, they have what you call a bullish engulfing.
Right.
It's the same exact story. This was bearish movement. It showed that they tried to push the price down. Next step come in, bulls close that and push it beyond. It's bullish engulfing. This could be considered a signal for the price to continue to go to an upward trend.
Notice how that green candle, it fully engulfs that red candle before. You could fit that red candle inside that green candle. That's what we call engulfing. That's called a bullish engulfing pattern right there. That could be used as a signal to identify a reversal in the trend. The price, that could be used as a signal for the price to go up. It doesn't always have to mean that. Depending on where it's placed, it could provide a stronger signal. Right here, it's not a real strong signal. It's not a real strong signal. As we can see, the price kind of remains flat.
Right.
But those are called bearish and bullish engulfing. Those just two formations. It's various formation patterns. Matter of fact, we got a cheat sheet. I got a cheat sheet I posted in the Discord with more of the candle formations on there. And you just, study them, look at the candle formations, and now when you go back and look at your charts, see if you can identify a bearish engulfing candle, a bullish engulfing candle. See if you can go on the chart and identify them for yourself. That's how you practice finding them.
And this right here is another common one. It's called a doji candle. Let's see if I can zoom in real quick. The doji candle is just like a flat line right here. It ain't gonna have a real thick body. What's happening here? It opened and closed basically at the same price. Now, a doji on either side, whether it's a green doji or a red doji, could also be another reversal signal. Like you said, it doesn't always mean that, but it is a signal that a reversal could be coming.
Right. For example, if you locate a doji at the top of a trend, near the top of a trend, that could be a stronger indicator that the trend is going to reverse. The trend is losing momentum. You told about the tails?
The wicks?
Yeah, the wicks.
Yeah. But you can go ahead though. What you gonna tell them?
Yeah, the wicks, when you see them with those wicks, sometimes the wicks at the top, sometimes it's at the bottom, sometimes they're at the top at the bottom, sometimes it's a longer wick at the bottom, sometimes it's a longer wick at the top. The wicks illustrate the price movement during the day. The price either went up as high as that tail or it went down as far as that tail at some point during the day. The body is where it opened at and where it closed at. Y'all understand that?
Yes, I get it.
Can you say that one more time?
If you look at a candle, if you take the body of the candle, would represent what the price that it opened at and the price that it closed.
This is
Now
the
you see
body
some of
what I'm
these
on.
candles, right? That's the body. Now you see some of these candles have little wicks with them, what we call wicks or tails. That represents right there. That represents the price that it went down to during the day.
Y'all see the
You
wicks?
understand that? At some point during the day, it went down to that price, but it eventually came back up and closed at the top of the body.
This is for bullish candles. It's the opposite for bearish. So on the bearish, it opened here. It went all the way down here. This the wick. It went all the way down here. And then it closed at the bottom. Now what he was saying on the what he was saying.
That red candle right there, what it's telling you is that at some point during the day, sellers came in, the bears came in, and they tried to push the price down to the bottom of that wick. They tried to push the momentum of the price down, but they were unsuccessful. The price came back up a little bit. Actually, it was successful because it did drop down a little bit. You can see that's a bearish engulfing candle right there because it fully engulfs the candle in front of it. So it was bearish pressure that drove the price down. That's what that candle is telling you. That one candle, that's what it's telling you. Throughout the day, it was bearish pressure. It drove the price down to the bottom of that wick at one point. It eventually closed at the bottom of the body. See how every candle tells you a different story.
Yeah, I get it.
Yeah.
It made better sense now.
So you may see a candle with a long wick at the bottom. That means that the bears came in and tried to drive the momentum down during the course of the day. You may see candles with a long wick at the top. That means the bulls came in and tried to drive the price up
See if I can find one.
at some point during that day. So I'm trying to see like that, I'm trying to find one with a long candle in either direction, a longer candle in either direction.
Along in either direction.
Yeah.
Let me go back.
Neo. Yeah.
Okay, here we go.
All right, you see that doji? That's called the doji. That doji had pressure from both sides at some point during the day. The
Y'all see
bulls
that?
and the bears.
Yeah.
But neither side really affected the price because it closed and opened in the same price. So they both fought for position, but neither side won out. When you see those dojis, that's what that means.
Right.
Now, if you look at the candle directly behind the doji, in front of the doji, that candle right there, that's a bearish candle because it's red. If you look at the wicks, at some point at the top wick, at some point during the day, the bulls tried to drive the price up, but they were unsuccessful. The bears won out on this candle because they succeeded in driving the price down. Y'all understand that?
Yeah, you can see the wicks at the top longer than the one at the bottom.
Right. You can see the bear. They tried to push it up, but they couldn't. And it ended up going down.
That's what this wick represent. This represent them trying to push it up. Even though it's red, they tried to have a green candle, but the sellers won. They pushed it all the way back down here, and it closed right here.
Right.
And then right next to it, you can see the Bulls starting to win. And then right next to it, you can see where the Bulls came through and then back down, and yeah.
Mm-hmm.
Right.
So now you can understand the price action. That's what the wicks and the bodies tell us of a candle. That's the anatomy of a candle.
Now y'all understand, y'all more comfortable looking at the charts and going over these candles to see what's really going on instead of just, okay, I see a bunch of green and then I see some red. Y'all should be able to tell the story of the stock for the day now.
Yeah.
Mhm.
And you can
Right.
tell with each green one, you can tell like with the one to the far left, the red one. Right next to the green one. Yeah, that one.
Mm-hmm.
That red one, you can kind of see, okay, the Bulls about to take over now. And then they did, and then
Yeah, because you got your doji right here.
yeah,
That's your reversal signal. That kind of let you know, okay, this trend right here might be over.
Right. You see how it's at the bottom of the trend, that doji?
yeah,
See how it's located at the bottom of the trend? When you see dojis at the bottom of the trend, that's kind of like a yellow light for the momentum. Momentum slowing up, and it may be about to reverse. So when we go move forward, we see that it did reverse. It started going back up.
Yep.
It started going back up.
You had one yellow light.
Yeah, you had one yellow light. We just kept breezing through. We kept flat. We stayed flat. We stayed flat all the way till we saw that. We see that green bullish engulfing right there. You see the bullish engulfing candle? That's a signal that price is finna go up. And that's what they did. That's just what they did. The prices went up. And then they came back down. Now, this is just the intro. This is just the intro to the candlesticks now. You know, this thing, it get real in depth. Because if you look at the top where it broke right there, where it was coming up, right here, you see right there, you see those two red candles after it. Those two candles right there will actually also be considered bullish engulfing. You see how both of those candles together fully engulf that green one before it? That is a bullish engulfing formation right there. It's just with two red candles instead of one. But when you see that bearish engulfing and see how it's at the top of the trend, that signifies that the trend is finna reverse. And that's what it did. It started going down. It started going down until you see that doji at the bottom of the trend. That doji is a signal for trend reversal. That green candlestick right after that doji was just your confirmation. A lot of times we don't trade on the signal. We wait for confirmation. We wait for that following candle to see what that following candle do. If that following candle do what that doji predicted, that's your confirmation. That's when we would place the trade right there on confirmation. So for trading purposes, always remember, when you see these signals, look for the next candle to give you confirmation. That's the go ahead.
Oh man, that's easy. That's downtrend all day.
Yeah, that's the go ahead. And that's how candlesticks are formed. That's how you read the candlestick formations.
Yep. That's candlesticks for y'all.
Yep. Now, like I said, that was the intro to candlesticks.
Downtrend.
Now, next week, we'll go into the chart formations. the different formations of the chart that we see. You know, whether it's a double top, whether it's a head and shoulders, a cup and handle, they have various names for the different chart formations. And those chart formations, when you learn how to read them, they will tell you exactly when and where to place a trade, and also when and where to get out of a trade. This is how we read. This is how we trade reading the charts.
That thing in a perfect downtrend.
Mm-hmm.
Wish I'd have seen that before.
Now you see those lines he just drew, those see how they not horizontal? See how they at an angle?
Yeah.
Those called trend lines. That's following the trend. If you look at the red lines, you see how the price is moving within that channel. Well, he's making them yellow now. If you look at it, if you look between those yellow lines, you see how the price is bouncing between those two yellow lines. That's your trend right there. So just from this, right? What happens to the price when it touches the top of that top yellow line?
It coming down.
Right. It bounced off the ceiling and it come down to the floor. What happened when it hit the floor?
Go back up.
Right. So if I'm looking to place a trade, right? Would I want to enter the trade when it's at the top or when it's at the top or the bottom?
Bottom.
Right.
Bottom.
Right, because we know it's finna hit that bottom and it's finna what? Bounce.
Yeah.
It's finna bounce back up. So just from drawing these simple trend lines right here, you can better see where to enter a position, enter a trade. If I'm trading to the upside, if I'm entering the trade to the upside, looking for the stock to go up, I'm gonna wait until it hits off the bottom of these trend lines and bounce.
So
That's
if I'm
gonna see
putting
the price up.
So if I'm putting in a put, I'm waiting for it to hit that top. Then I'm gonna put my put in because I already see the trend is gonna hit the bottom once it hit the top. Yeah.
Yeah, on the put side, you could get in here.
Yeah.
I wouldn't get it right here. I get back in right here. I could get in right here. All this is still inside that downtrend. You could ride all this down.
Yep. You could have picked up them few. That was money right there. You could have picked up that move right there.
This move from right here to right here, that's a lot of money.
That was money right there.
69 to 65, that's some cash. You let it come up like you know it's gonna do when it hit here. Then you take 66, back down to 65. Then you go 66 again, back down to 65.
Yep. All that was money.
Put. And it's still in your downtrend. So you could just keep riding it as long as your downtrend hold.
Yep. So just from drawing these, this how you draw on the chart. You draw these lines, you identify these trends. Okay, they're in the downtrend. Let me draw my trend lines. Let me connect my trend lines. Okay, now I can see my trend lines. I got my floor and my ceiling. I can see how it's bouncing. Okay, and you can see right here at the end. You see where it done broke the trend.
The downtrend over.
Yep, that's called the breakout. That right there is called the breakout. When the price close above the trend line, that's called the breakout. That's also a good time to put in a trade right there.
Yep. And see, a deep technical analysis, I can easily see what happened right here. Because if I just draw the line, they was waiting on this moment.
You see what's that? Bullish engulfing. That bullish engulfing formation right there sent the prices higher.
This level right here was something that was anticipated. See how it's sitting here? They was waiting for it to finally give a good sign that it was going to break and hold. It temporarily broke, but it pump fake came back down. Sat in this area, got the 3 candles, a little bit of pump, confirmation that it's going, broke that same area from back here. Now they gone.
Right. If you go right here, go right at the bottom of your trend line.
Well, over here?
At the end. Right, come back some, right there.
Yeah.
All right, you see that candle right there? That candle, see how that candle right there closed outside of that trend line?
Mm-hmm.
That candle right there signals the breakout from the trend. So you could place a trade right there on that candle. You could have put in a call right there. And you see how it went up? You see how it went up? More times than not, when a price breaks a trend, it's finna go up. When it breaks that downtrend, it's finna go up. When it break an uptrend, it's finna go down. So that first candle right there where you saw it close and it broke outside of that trend, that was a signal right there. To place your trade for a call. Put your call in or buy whole shares.
Mm-hmm. And then, like you said, when it break the uptrend, because this is exactly what happened. Viacom was doing good.
Yeah, it was in the up, then it broke. If we would have caught it when it broke that uptrend,
way up here.
Yep, and put puts in. Look at all that we would have caught. Look at all that money we would have made.
And you actually could have rolled it from here all the way down to the bottom of that day.
I could have took profit right there at that first valley. It came back up a little bit. I could have averaged down, picked up some more, and then rolled it all the way back down.
That
would have been a hell of a trade right there. Made a lot of money. Look at all that money. Look at all that. That's a 15-point move.
84 to 69 in a day. God. Yeah.
All that money. That's how
too
these
much on that though.
Yep. That's how reading these candles, marking these trend lines on the chart. That's how we can learn. We can identify these times and start to capitalize, execute, and capitalize. This is how we make money, how we become better traders. This is how we know when to go call, when to go put. This is what all this tells us. And we get better with practice.
Any questions for this week's lesson?
Man, y'all made that shit so much clear.
Appreciate it.
Yep. So when you in your spare time, go look at some of your charts. Practice finding trend lines. Practice finding your support and resistance lines. Once you done got all your lines on your charts, look at them. Look at these candles. Try to identify some bullish engulfing, some bearish engulfing formations. Do this what you do on your own time. This practice. Eventually, you'll start to see them like nothing like that.
Mm-hmm.
You start to see them like that. You'll start to see them before you even draw your lines. That's where the practice come in at. But this is how we become better traders. By becoming better traders, we make more money.
Yes, sir. With less risk, mitigating that risk,
right?
Maximizing the returns.
Right. You already mitigating a lot of risk just by reading, having a better understanding of the chart of the candles, drawing support and resistance. You saw how we had that channel. You no longer guessing. You can see it. It's right there. I can see what it's finna do. It's finna bounce off this bottom trend line. It's finna go higher. You already know that. So you already mitigating some of your risk just like that. It's almost like throwing a ball at the ground If I drop this ball out of my hand, I bet you any amount of money that ball when it hit the ground, it's gonna bounce. Now you wanna call me on that bet? You think the ball gonna hit that ground and keep going through the flow? You know what I'm saying? That's a safe bet.
Mm-hmm.
That's a great illustration. Thank you for that.
Yep. When you see that flow and you see it coming to that flow, you know it's gonna bounce. You know it's gonna bounce. Now, I'm not gonna say it's gonna bounce every time, because it is times when it could break through the flow. But now we're going by the probability. What's the probabilities of that happening?
Right.
You know, I could lose a trade. That matter of fact, I'm down on the trade right now, Nike. I did exactly this. It was at the floor. I bought it thinking it's gonna bounce, and it broke through the flow. It went the other way. It went against me. Hey, it's a stock market. Sometimes that happens. Sometimes that happens, but more often than not, it's gonna hit that floor and it's gonna bounce.
Right. So if nobody got any questions, we'll go ahead and wrap this one up for this week. Make sure y'all like, comment, subscribe, let somebody know about the video. If you feel like this information was helpful, share it to somebody who you think it'll help. If you don't feel like it was information, be sure to let us know what we could do to improve, help better y'all experience. And we look forward to seeing y'all next week. Peace.
Peace.